The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis's, from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. I posted the chart of the DAX. Folks had given most of that back already, but the one that's the most interesting from our perspective, of course, is this FTSE, because this is the exact same pattern that we were seeing on the daily chart in the Dow Jones Industrial Average and the New York Stock Exchange last week that we talked about. That's what we left you with last Friday, that we were completing a major sell signal in that. Now, whether the market's going to go down, this is just an early part of Monday, which we've seen this market reverse more and more all the time. So at least that pattern has started in the right direction, if that is, in fact, which way it is going to go. But we've given quite a bit of it back, already. So that's a main thing. Now, we've had a question about Bitcoin on this log scale, and I just wanted to bring this up to you. Log scales, when the thing is really wild, so you can look at it better logarithmically than arithmetically, you get to see more. But you can see here, this is the when it was way back, just when it hit $1,000. But remember, this started at 6 cents a share. But if you look at this, you'll see that the correction of this market that we've looked at here, and this is when it was trading at 10,000. We're down at that point E right now, and we're heading towards 4,000. That's where the ABCD structure comes in. So that's what we're looking at when you're watching this. This has had basically four bubbles. The first one went from $1 to $1.85 and $1.85 to some godly number like 150, and then down to $6 or something. I mean, I posted them once before, but I've lost that chart. I'll find it again, hopefully. But that's what we're looking at here. This does not have the bubble effect that we see when they talk about that tulip bulb mania from 1634 to 1637, when tulip bulbs went from $1 up to $18,000. Oh, we got a caller from, really early in the morning. Good morning, John, from Philadelphia. How are you doing?
Good morning, Larry. Good start to the week to you. And ask you the question, have you migrated back to Arizona yet?
Yes, I'm in the home abode just in time for the rainy season. We got a good 2-inch rain the other day. It actually had the water in the Rito River running, which is very rare. So it's very nice now. It's 85 degrees, and it's going to be a little bit muggy today, but rain tonight.
Excellent, excellent. Larry, I'm calling in early to ask a question. Ask for your help, please, in trading the NASDAQ futures indices because I've made an observation that dovetails with what you shared with us back in March, courtesy of Jim Bartolioni, when back at that time he had assessed the NASDAQ Composite Index with the high it made, 7637, I think was the exact high, March 13th. And how that was a fib expansion level on the long-term charts. I observed last week the NASDAQ 100 is just doing the same thing as of last Thursday, and I'm thinking to myself that's a candidate for a turning point of end of a rally sort of thing. I'm wondering if you can go into that with more detail, and I ask for your assistance on trading tactics, how to handle that, please.
Well, I tell you, I can't go into any more detail than what Jim does, because he does such extensive sacred science and sacred number work that it just way over my pay grade. But he is really, all I can do is I can share with you what the NASDAQ chart looks like on the daily. Now, this is going back over the last 5 months, but you can see here on this chart that, and this isn't nearly as mathematically accurate as the one that, Jim was doing, because he was doing all kinds of sacred ratios that that most people don't understand, including the person that's speaking right now. But if you look at just the simple ABCD structure here, you'll see we have two really large ones from the February low to the April low. That measured up there to that same number you were just chatting about. And then we had another one between the May and June that they both came to the same area. And this is much stronger. But remember, when you're looking at this NASDAQ, John, you've got to realize that's 100 stocks, and believe me, with 15 of those 100, you can control that thing because it is cap weighted. And when you're looking at Microsoft and Apple and Google and these high price things, I mean, my goodness, they can control the whole thing because it's really a two-tier market. We're seeing one market like the Dow Jones and the New York Stock Exchange Index nowhere near new highs. It's only making 61% retracement, and yet with the NASDAQ, you're seeing the market making new highs. So they're totally different markets. It's like comparing apples and pineapples. They're just they're totally different fruits.
Yeah, very good. Thank you on that. Just in the For What It's Worth department for your audience in the Tiger's Den, I posted the quarterly charts for the composite and the 100. The former is essentially my construction of the chart you showed of Jim Bartleone's back in March, and then of course I complement that with the 100 quarterly chart. And you know, you have taught me over the years how from time to time markets respond with what I call unbelievable precision to those Fibonacci mathematical ratios. So I just can't help but stand up and take notice and ask myself the question, that high that occurred last Thursday in the NASDAQ futures, if that couldn't possibly be something important. So thanks so much for your input, and I have to tell you, you're bringing people like Jim Bartleone to us. That's terrific as well. So thanks again.
Well, thank you, John. I appreciate it. We got somebody else really important this week. Well, everybody's important, but somebody new, Dennis Gartman of the Gartman Letter, who is on CNBC regularly, is going to be our guest. I met Dennis, oh my gosh, 40 years ago, back in the old days of the Merck, and he will be our guest on Thursday at the half-hour break. Now, I posted a chart of the Dow Jones Industrial Daily. This is the one we talked about last week. Remember, this was Monday when we hit that exact number of 25,399. So it hit it pretty much spot on Monday. And if we look at the New York Stock Exchange Index, you're going to see what I was talking about as far as a two-tier market, because you can see the blue line, which is the NASDAQ, has been going basically vertical, and yet we're going sideways with the New York Stock Exchange Index, which is the real market. That is the market of the broadest form of the market, because you're looking at 2,600 stocks that are all cap weighted, but they're at all broad categories. It's not just high tech stuff. So that's what we're watching as we're looking at some of these things here this morning. We're coming up to the first break, and when we come back, I would like to share with you breaking down some of these NASDAQ and some of these high-flying stocks, what they really look like from a technical basis to get your perspective. So 877-927-6648.
Thank you, Larry.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at the stocks that are really in the news that are really making this NASDAQ move. The first one, of course, is Amazon. As you can see, it was making new highs last week up at that. There's a double ABCD pattern, just spot on. So I think that if we keep an eye on that, we will keep an eye to see what's going on with it as far as if it's going to go higher. Now, whether it's going to be lower today or not, I'm not sure. But let's take a look at a couple of others that I think are important. First of all, this is the most widely held stock of all, which is Apple. Over the last 6 months, as you can see, we have a 3 drive to a top pattern. This is nearly perfect, and this was done well over a week ago when we hit that 194.5 level. We're now trading around 188. And so that pattern should be complete, and Apple should not be making a new high, at least for quite some time. But that's what this longer-term pattern is showing. So we need to, watch that, very, very closely. Now, the next one, of course, is one of my favorite stocks, which is Google. And you'll notice here that we're also completing in Google an ABCD pattern. Just a tad above the 1.618 and the 786. It went above it by about $8 Friday, but that completed the ABCD pattern from down at that level. So that's the main thing that we want to be watching here as we're looking at this, is the fact that it should stop right here, because this is the only one of all these stocks that I looked at that actually broke the ratios of of what we're watching. So keep a close eye on that, and give me 1 second here. I have to change an order, otherwise I'm not going to be filled. Hold on 1 second, and I'll be right with you in 1 second. Okay, there we go. Let's move on here to the next question here that we had, and that is we want to look at the next stock, which is Softy. This is another one that certainly has completed a really nice pattern here. We've had a double ABCD pattern also coming up into that 102 level. The high was 102.70. We had a pretty strong down day, a couple points, which is nothing in Microsoft, and we'll be doing this, following it through here, because with this big move down, if you go to the far left and look in January when it had the big move down, you notice that it had a pretty good drop. It went all the way down from 97, dropped 10%. So 10% drop here would take it down to about 90, which would be a normal correction in a market that's just, ratcheting higher. So nothing's really dramatic about this. The fact that it's completed these patterns, whether they're big enough longer term to pull the market down, remains to be seen. So that's another one that I think is important. If we take a look at Facebook, now this is one that's has made a double top, it looks like anyway. If we take a quick look at it, you'll see we did make a double top. We took that high out from January by about $1.50, and we did make another high, and we made a 1.27 expansion, and then just slightly higher than that. So this is the key thing. We had that big range day on Thursday, and then the quiet inside day with the doji on Friday, which is usually indicative of a market getting ready to either continue or reverse. And that's what we're looking at here in Facebook. I don't know where it's trading this morning, but this pattern of a double top with these ratios and things are certainly complete. That's the way we look at it. Now, Netflix, which has been the strongest of all of these, and this is the only one that is not turned down as of yet. I don't know where it's going to be this morning, but you'll notice that we did complete the large ABCD from February up into March and then down into April. That measured to 397, and the high so far has been 398 and change, and we're trading around Friday we were trading around 391. But what I'm trying to show you on all these, that all of these patterns of these big high price stocks are completing major patterns. Two more to go, and then we'll get back to some of the other things that you have questions on. But if we take a look at one of the stronger stocks in the Dow, which is the most expensive stock in the Dow, which is Boeing Airlines, you'll notice that it also has made a double top. The old top had been 373. The new top was 374. So that does qualify as a double top, especially since you've come down $17 in 1 week. That's certainly, and when the market's going straight up. So the last one, of course, is United Healthcare. This has been one of the strongest sectors. And, of course, the weakest sector has been the banking index. We'll cover that in just a minute. But here with the United Healthcare, you'll notice that you also have these same patterns forming. The reason why I bring all these up, because these are in the news, and these are the stocks that are making these things move. When you've got expensive stocks in the Dow, like Boeing and United Healthcare, they're keeping that index up because of those 30 stocks, 15 run the whole game. So those are the ones that have skin in the game. So pay attention to that one. That's a very, very important concept to look at. Now, since we were chatting about the banking index, I just wanted to show you this had been the strongest ever since the bottom in March of 2009. And you'll notice here that this thing actually topped way back in January. We never took out the high in March. We made a little double top up there, but we've had lower tops through here. The last top that we had, which was in early June, that was a 78% retracement of the high in May. We never took the May out, which hit it twice exactly at the 61% retracement. And Friday, we made a 61%, a little below the 61% retracement, and it held so far. But this stock index, the banking index, does not look that good. And Goldman Sachs, being part of it, is also as a stock, $240 some a share, doesn't look very good on the charts either because it's in a downtrend. We have lower tops and lower bottoms, and that's what we're watching as we look at some of these things here this morning. But those are the main ones I look at. Now, Tim Bost actually sent us Tim Bost, I'm sorry, Tim. I always do that wrong. I'm very sorry. But this is a weekly chart, and what Tim did was show the influence of Gann when he talked about the solstices. And we have the summer solstice coming up here on the 21st of June. That's in 3 days. And you'll notice that sometimes on these charts, you'll notice that those solstice areas have had some really good fluctuation points in some of these markets. So we want to keep an eye on that to see what happens. But we're in a zone here where we're really having, and remember, Norm Winsky was on last week, and he talked about the planet Neptune is in retrograde motion this week too, which is one of the bigger things occurring this week, as I recall. I hope I did that correct, Norm. If I didn't, I'm sure you're going to let me know. But that's what we're watching here because these things look so very, very intense, I guess would be the way to look at it, because with all the news that's out there, there's a great deal of emotionalism, folks, and that's the whole thing to remind yourself to. Now, let me show you the last chart on Bitcoin. This is with a regular arithmetic chart scale, not logarithmic chart, and you can see here that big ABCD pattern in that red box down there comes in around $4,000 a share. That's the big ABCD pattern that we're looking for. Right now we're trading around 6,600 in the Bitcoin, but 4,000 is going to be interesting. And this is not a bubble type chart, folks. The bubbles go straight up and come down. This has taken well over 6 months to make a pretty good correction, but on a log scale, it is not a bubble. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've been asked to take a look at the copper chart. We posted it last week because we had that potential for a double top up there at that 331 level. We also mentioned that above 331, it could literally go, ballistic and make 337 or, 347 without any trouble at all, but it stayed there for 3 days and then rolled over. What's important now in the copper chart, if you'll notice that secondary line there that comes in around 317, we're now trading below that. That's a very negative sign. We should have held support at that old high that we made back in April. Basically, what that is saying is that everybody that has bought that breakout above 1315 when it took out that April high now has a loss. That's not a good sign because we are trading below that now. So that is a negative sign for the long side of copper. But the key here, in my opinion, was the fact that we made that 1.618 expansion from April through June right to the money. That was at 331 a pound. We didn't get any higher than that. The old high that we made back in December was 332 a pound. So it was pretty much spot on as a double top, and now we've reversed from that level. If we ever get above that 332 level, all bets are off, and you could see one heck of a move here in copper because we've consolidated at a very high level for quite some time. So that usually tells us that that's what we're watching when we're looking at some of these things. Now, I've been asked to take a quick look here at the Treasury bonds, and as you know, we've been rather bearish on Treasury bonds for quite some time. We had that big rally. Our good friend Bill Meridian from Cycles Research in Vienna, Austria, posted a special post this weekend saying that it was time to reshort the bonds, looking at higher interest rates. And if we look at this daily chart on T-bonds, you'll see that we had that really strong rally from 140 up to 147, then we backed off to a 61% retracement. Well, the 61% retracement back on this next one comes in at around 144.20. So watch that very, very closely, because if the rally's up into that area, it would be what I would think would be a relatively low risk shorting opportunity. But the key there is low risk. You don't know which ones are going to work and which ones aren't, so you have to be able to protect yourself at all times. But that interest rate picture, there is no way that I see how anybody could think that there's a bullish interest rate picture showing interest rates that will be going down. Look at the Treasury notes, folks. This is a long-term monthly chart on Treasury notes. And if we take a look at this, we're looking at another 4 handles down just to complete the ABCD pattern. And look, and this isn't the bottom of the market. The bottom of the market was back in 1983. And look at where we are now. So this is a big thing. If we get down to that 115 level, that will equal the retracement that we had between 2002 and 2007. How many years is that? That's 5 years. Well, if we go from 2013 in 5 years, 2018. So this could be a really nice ABCD pattern to look at possibilities for a bounce in rates. But I don't see them bouncing until they spike at least more. But, it could be wrong, but this is just the pattern that we're looking at. It's just got the things that we're keeping an eye on to pay, close attention to it. The main thing to focus on today, folks, if you're trading on a short-term basis, is to keep an eye on that crude oil, because we've had a really good rally. We've rallied now 160 pips off the bottom. There's nothing bullish about that crude oil chart, other than it's having one heck of a rally, because if we look at crude oil, you'll notice here that all we did last night was to go down and make new lows. And if you'll just bear with me 1 second, you'll see that the low was almost exactly at the 1.27 level. It missed it by about 15 pips. And all we've done now is rallied back 160 pips. And remember, the harmonic number in crude oil is 80, so 2 times 80 is 160. So that's probably all the bounce we're going to get is up here around this 65.20 level. That's what it looks like in crude oil. I don't know if that's going to be the case or not, but that's nothing more than a market that looks like it wants to go lower, and it's having a pretty good short covering rally. That's pretty much what we're watching. Now, we've had several questions this morning about the gold market. I covered this very extensively in the newsletter this past weekend, because it appears to me that gold market has told us that it wants to go south, and whether it's going to continue that way or not, we'll have to wait and see. But if we just look at the gold here on a daily basis, what's happened, you'll notice that we broke some major support here at that 1285 level. We're now trading around 1282. We got down as low as 1277. Here again with that big wide range down, looks like we are going to go lower. And if we look at this from a geometric standpoint, if you look at the high in April versus the low in May, and just clone that and move it to the right, you look at the high in June to the possible low coming in on around the fourth week of July, around the 25th, 26th, that would be an equal price and time distance down. Well, look what happened to gold on Friday, folks. It went up and took out that previous high that we'd made in May by less than $1 at 13.13. The old high had been 13.1280, and that was a 382 retracement from the high that we made back in April when it was trading at 369. Boy, that's a giant red flag if you're trading using pattern recognition and Fibonacci numbers. So this is telling us that gold wants to most probably drop down into this level of 1200. That's where the 1222 is actually the actual ABCD pattern on this. So that's what we're looking at. We're $60 away, but if you can lose $30 in one day, $60 in a month is nothing. So this is a bearish market that we have going on here in gold and silver. Of course, we had that double top that we talked about Thursday, and you'll notice here that on Friday was the day that silver had the big move to the downside, and that's what we're watching here with some of these things, because they've actually, we're showing a possibility now that silver's trading around 1640 or something. We could easily get down to that below 1600, around that 1510 level, and that would be a really nice double ABCD pattern, and also it would be I believe a 50% retracement on the long-term move going back, oh my goodness, 4 years. So we want to watch that number. If silver does ever get below 16, we want to start watching it, because 16 would lead to the $15.10 per ounce, and that's the one that we're looking at to see what's going on. We've got another break coming up here pretty soon. When we come back, I'll try to talk about the grains a little bit. But with these tariffs that are going on and the potential trade war, all bets are off, because the ones that are getting hit the most, of course, are the soybeans and the corn. And that's right out of the belt, the Bible Belt, where all the grains are in the Midwest, and that's the heart of the Trump's supporters. And believe me, these farmers are not going to be happy. But most of the farmers, like we mentioned when we had Cy Only on, he said that 95% of his farmers had sold beans at $10.50, and now they're $1 under that, way under $1 under that. So they're sitting pretty good. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we want to post a chart of cotton. Someone's asked us to take a look at cotton. We were looking at a potential up there around $96, and we've had a pretty good break. What I was pointing out here, and you can see here that we backed off to this second retracement level, and if the cotton can hold this, it's got a chance to go to $1 a pound, but we had so many multiple patterns coming up there that it has a high probability of correcting even more. And given the fact that we're having some tariff problems and some of these things, we want to pay relatively close attention to. Now we're having a continued sell-off in the corn and beans and stuff today. Corn's down another 4 cents. It's broken well over. Well, it's broken. Looks like it's broken $1. Almost not quite, about 90 cents in corn, $1.50 in beans. These are really big corrections, folks. So this is hurting farmers that have not hedged their crops. But as we mentioned, Cy Only said that 95% of the farmers that he carries had hedged their crop. There were only 5%, and those are, very high speculative places where they really watch, the type of things that they're trading. In other words, they're sort of like what they call the Texas hedge, long the futures, long the cash. So that's what we're watching here in these grains. But there will be a bottom somewhere in here. They are, you don't stop eating just because you're in a trade war. So you got to be really, really careful about that. Now, the one that's really interesting is the fact that, one of the things that should have gotten hurt the most in this was the hog market, because they buy so many hogs from us. China does, but look the price of hogs had held up all during this time. Now I don't know if they're going to continue doing this, but this is telling us that there must be a really strong demand for hogs, because they're going to buy them at no matter what price it is. But you see the big ABCD that we have there in the hogs. This is going to be interesting to watch to see if it follows through with what the other agriculturals have done. Someone's asked the question does this affect copper? Folks, I don't know. I know that the largest supplies of copper are held by China, so I don't think it does. But again, I'm just guessing. I really don't know. The only thing that I have a slight idea about, that's through Rich Anderson and Cy, is the fact that the grains, especially the corn and the soybeans, are most definitely hit by these tariffs. That's the ones that are the worst that we have as we look at some of these. So keep watching, because there's going to be a bottom in here somewhere, and we certainly want to take advantage of it if we can. But it's pretty difficult when they're under a great deal of selling pressure like we're having now. And a lot of this is fund liquidation, because they've just the hedge fund, or the mutual funds for I guess they're called mutual funds for commodities, have been heavily involved in that. And that's something that they're getting hammered, and they take some huge swings, and this is one of those. So when this is over, we're probably going to get one heck of a bounce in some of these just to see, what's going on. Let's take a quick look here at the foreign exchange markets. We'll look at this U.S. dollar index because we went up, and I wanted to show you this pattern because we've made a double top to where we were in October. But that big move that we had on Thursday, that was a 61% retracement of the low from May, just spot on. It was the old high in May at the exact price of that 93.27, and we're trading above 94.50 right now. And it looks like we want to go higher. Longer term, this certainly looks, like a very, very bullish chart. And the key levels to watch, of course, on the upside, watch the level of 116.60 in the euro, folks, because that is a ABCD on a smaller time frame. As you look at this unfold, it will give you, a rough idea that these markets. See if I can get this up here to show you. Hold on one second here. And I know I've got it. Well, knowing it and finding it are two different things. Nope, that's the gold. Let me just do gold. I'll just bring gold up since I've got gold up. We'll just take a look at. Here's what I'm looking at in gold. We broke down below that key support there at 1297. All we're looking at now is to see gold make a usually around a $12 to $17 rally. If it rallies $12 off the bottom, that's going to take you up to a 382 retracement. So if it gets to 1290 in the next day or so, or today, that's probably going to be pretty strong resistance in this August gold. So keep a close eye on that one, because if we get above 1300 again, that could change this whole scenario of being bearish. But right now, the charts are certainly telling us that it looks like the gold market wants to, move to the downside. That's one of the things that we're paying attention. Now, remember, this is the first hour of trading. This is when you get a lot of people coming into the market, and many times the market will reverse. I would like to mention, for those of you that are, watching the Dow Jones futures, watch this level of 24,800, folks, because that is a key level to pay attention to. The NASDAQ has not even taken out the highs of last Thursday, the lows of last Thursday yet. So that's another one that looks, relatively interesting. So I think just from looking at this that we might get a little bit of a bounce this morning in here. And news coming out of these things can change quite a bit. So pay close attention. One other number that I think is really important from a grain standpoint is if you'll look at November soybeans down around the 912 level. That's 17 cents from where they are right now. But 912 is going to be a 1.618 expansion of the move down. In other words, you had that big move down. It might have stopped at 1-to-1, but it didn't. And the 1.618 expansion of that move comes in at 913 in November beans. Folks, they were trading at 961 back on the 29th of May when we were having the heat in the Indianapolis 500. It was 97 degrees, this hottest May since 1937. Well, you can see what happens when the fundamentals bite you on the kabuki, because that's what gives you a huge problem in here. So pay attention to that, folks. It's an interesting one, to really watch, and it could be something that would be very, very important to pay attention to as we look at this. So anyway, that's what we're watching, and we'll see whether that's going to mean anything or not. But that's what it looks like in beans. But that's 17 cents away. That might not even be today. I'm not even sure, but I do have that on my watch list. The one that I would like the best of all today would be to sell those September bonds up around that 144.16, 144.20. That's a whole handle from where they are right now. But that's something that also looks really interesting. So these are just a few that we're watching. But of the three, the way you folks look at it from the stock market point of view, that futures for the Dow E-mini at that 28,400. That's 100 points from where it is right now. That's a key level. We go below that, we could really see some cascading to the downside. That would be what I would think would happen if in fact it did. I'm not sure that's going to happen. I'm not sure of anything. It's all based on probability, but those are just the numbers that we're looking at as we go through some of these charts today. That's the key thing to look at. But of course, I'm going to end the show when we come. Oh, I wanted to cover the emerging markets because this is a very, very important concept here. Someone asked me about this because this was. All right, let's get back. Well, I'll cover this emerging markets when we come back from the break. 877-927-6648.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to bring to your attention this chart on the emerging markets, and I've highlighted this section here during the spring of 2017, during that May through July period where we went basically sideways for well over 2 months and then broke out to the upside. Folks, when you see a pattern like this, you be extremely careful, and the reason why is that is a high-level consolidation, and there's a giant battle going on at that level between the shorts and the longs, and you can see who won this battle. And boy, you don't want to stand in front of that when it finally breaks out, either to the upside or the downside. You know, don't stand in front of it on the downside if you're long, and on the upside if you're short. And the reason for that is that's a large amount of accumulation. Somebody's willing to buy at a very, very high level. What their reasoning is doesn't really make any difference, but they are able to make that commitment that they want to buy it, and so it doesn't make any difference. And not only that, but they're right almost all the time because the market's not going down. So when it finally does break out, it's caught a lot of people on the wrong side of the market, and that's when you get these, you know, really big moves. So when you see that again, you know, be very, very aware of it because it's a very, very important concept. That's one of the advantages of technical analysis is the fact that you don't know what's going on, but they can't hide from you. You know, they can lie, cheat, give you misinformation, but if they're buying, prices are going up. If they're selling, prices are going down, and that's really what you're trying to see what's going on. And you can see the battle, you know, finally changed in July of 2017 when the shorts lost control and the longs took control. So when you see that, it's a very, very important concept. It's not covered very much in many technical books, but it's extremely important. You don't see it that often, but when you do see it, pay attention to it because that's something big getting ready to happen. You see a lot of the times when the market's making a bottom, but not in a halfway move like we're seeing here. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
No matter what